What's going on YouTube? I'm your mentor Arkhamtrades and welcome back to another video. And in this video, this is pretty special. We're going to be going over probably one of the most simplest, easiest strategies to learn that can help you make your first $10,000 trading. And throughout this video, I'm going to give you guys not only the exact framework of what this strategy is, but towards the end of this video, we're going to be giving you guys a trading plan as well as a backtesting guide on how you can use this exact strategy so you guys can achieve these results. So for the first lesson, we're going to be talking about liquidity, right? Identifying, trending versus reversal types of liquidity, right? This is going to be very important. And then we're going to be talking about SMT divergences. SMT divergences are one of the most important, techniques in all of trading that not a lot of people talk about, but can actually create some really good reversals within the markets. And then from that, we can talk about fair value gaps. This is one of my favorite ways to enter the market. And then after fair value gaps, we're going to be talking about inversion fair value gaps. Not a lot of people talk about inversion fair value gaps, but they're actually very, very powerful, and we can use them to spot some high quality reversals, especially when paired with an SMT. And we'll talk about that later on. And then last but not least, we're going to be putting things together. We're going to be doing a top-down analysis, as well as towards the end, we're going to be giving you guys a full PDF and trading plan so you guys can get the most value from this exact video. Make sure you guys watch till the end of this video, as well as take notes so you can get the most value from this. If you guys haven't already, make sure you guys click that like button, as well as if you do want to join the Spark Train community, this is a completely free Discord of over 3,000 students, helping them every single day become better traders. If you want to join that Spark Train community, click that first in the description and join the free Discord community. Now let's get into the video. So first, we're going to be talking about trending liquidity, and we have to understand the underlying market structure within, the price direction. So the market can move in one or two ways. So the first way, obviously, we can see prices creating a downtrend, creating lower lows and lower highs within the markets. And then the other way, we could see price creating an uptrend, creating higher highs and higher lows within the markets. The most important point that we want to pay attention to within market structure is our reversal signature. This is the point within the markets that we can say price is classified from going lower to now higher, or higher to now lower. And it's a very simple pattern, right? As the marketplace is going lower, price is creating what's called strong or protected high, meaning that price should not break back above these high points. We can see price create this break lower, right? As we break back below this low, this is a breaker structure, right? Price sees this break lower and it should respect this previous high, not taking it out. And this is what creates our lower high. When price creates this breaker structure again, this is now a strong high, or what you may call a protected high, meaning price should not break back above this high point. And then we see this breaker structure once again. This is now a strong high point and price does not break it out. But we can see here, after price creates this breaker structure, instead of respecting this previous lower high, price breaks above it, creating what's called a now higher high, right? So when the market is in a downtrend, these previous highs should be areas of overall resistance. When we're in a downtrend, price should, ultimately respect these previous highs. But the moment that we create, this liquidity sweep, and then we see this break to the upside, creating now this higher high, this could mean that the overall trend is shifted. And our main confirmation that the trend has shifted is when price fails to take out this previous high. We can see price creates this lower high and then it creates this lower low. Instead of creating maybe a higher high and then a lower low, price creates this higher high and then a higher low, meaning that price fails to take out this original low, meaning the overall trend is shifting from lower to now higher prices. During a downtrend, price should attack these previous lows and protect these previous highs. During an uptrend, price should respect these previous lows and attack previous highs. The moment that we start respecting previous lows and attacking these previous highs is our confirmation that price is shifting from lower to now higher, meaning that once we create this higher high and then we get that confirmation with this higher low, we can trust that the overall trend is shifting from lower to now higher prices and vice versa, from higher to now lower prices. And this is what I refer to as our reversal signature. And this is very, very important. And within this reversal signature, as we can see here, we want to look for what's called a SMT divergence. This is when we have a correlated market and we can see that one market takes out a previous low and then sees this higher high. But then the other market creates what's called a higher low and then takes out this previous high. So the difference between this one market taking out this previous low and this other market failing to take out that previous low is our SMT divergence. This means that the correlated market to the right has some bullish momentum to it. And since these markets are correlated, if this market is pushing higher, most likely this market is also going to push higher with it. So this SMT divergence shows us that this market is strong and can see higher prices. So as this market goes higher, it also pulls this market up with it. And some of the correlated markets that I personally use, that's one of my favorites, is obviously the NASDAQ and the S&P 500, or the S&P 500 with the Dow Jones, as well as we can use the GBP/USD, as well as Euro USD, XAU USD, which is gold, as well as Silver USD or XAG USD, AUD USD, as well as NZD USD, and obviously Bitcoin with Ethereum. So obviously, if you do see this pattern between the two correlated markets, let's say this is a NASDAQ takes out this previous low and then sees this higher high, vice versa to the S&P, failing to take out that previous low, yet still creating that higher high. This is that SMT divergence. This would be our confirmation that price is most likely in a reversal state, and we can anticipate higher prices. We can get into fair value gaps, where fair value gaps is very, very simple, and I'm going to break it down here pretty easy, right? So we have a 3 candlestick formation, right, where price creates this gap within the middle, right? If price was bullish, right, price should come down into this gap to find support to push higher, right? As the market pushes higher, this is what we call an expansion. Within these expansions, price creates inefficiencies, right? For the market to go higher, it must come back lower within these inefficiencies to find support to then push back above higher prices. When the market goes higher, it kind of leaves gaps, and price eventually comes back into these gap levels to fill them in before continuing. Same thing from a bearish perspective, where the market saw this expansion to the downside, then we see this correction move back higher within this bearish fair value gap, and then we see that continuation back lower. Then we have what we call the inversion fair value gaps, right? This is where, right, price creates this bullish fair value gap, yet instead of price finding support at this bullish fair value gap to go higher, price breaks back below it, right? When price breaks back below this bullish fair value gap, this is probably our indication that price is most likely in a reversal, and it's going to use this once prior support fair value gap as a level of resistance to now reach back below lower prices. And the same thing could be said from a bullish perspective, where we can see price was going lower and lower, creating this bearish fair value gap. We would possibly anticipate price to come into this level to anticipate lower prices, but instead price broke back above it to find a level of support now, right? This once prior level of resistance is now support, to find that support to push back above higher prices. Putting it all together, the 3 things that we really want to understand is obviously, is price within a level of liquidity or a higher time frame point of interest? Was there a SMT divergence, and did price break back below a fair value gap? When the market is in a reversal, it's not just going to reverse at any particular point, right? There has to be context or reasoning for why the marketplace should reverse, right? This is what we call our bias. So we can see the marketplace opens up and it comes higher into, let's say, this 4-hour fair value gap. Price comes back up into a 4-hour bearish fair value gap up here. Then we would look for an SMT divergence between our correlated markets on the 15 minutes. If price came back up into, let's say, a 1-hour fair value gap, then we would look for an SMT divergence on the 5 minutes or the 1 minute between our correlated markets. So we can see here, price opens up, comes higher into this level of resistance, right? Let's say this is the 4-hour level, and then we create this 15-minute SMT divergence. We can see on this market, price takes out this prior high, but on the correlated market, price did not take out that prior high, meaning that this is an SMT divergence. So we tapped into a level of resistance, then we had an SMT, and then we can identify this 15-minute bullish fair value gap, right? We want to see price potentially inverse this level, right? And basically how you would identify price inversing this level is when we see a body close below the opening price of this fair value gap. So we obviously see this opening price right here, and we see price closing back below it. As price closes back below it, this would then be our confirmation that price has inversed this level. We can see price eventually comes back within that inversion fair value gap right here, comes back inside that inversion, frame our short, stop loss just back over these high points, targeting just most recent points of liquidity, which we can identify these liquidity pools down here. The other scenario would be a prominent area of liquidity as prior session highs and lows, prior daily highs and lows, Asia highs and lows, equal highs and lows, and old highs and old lows, right? If you want the specific times for like prior session highs and lows, prior daily highs and lows, as well as Asia highs and lows, I did put that within the free PDF. So if you guys want the free PDF that I just outlined, you guys can click that first link in the description and join the free Spark Train Discord community and just go over to PDF section. But in this case scenario, let's say price comes down into, let's say there's a prior daily low here, right? Within this prior daily low, price creates this SMT divergence, right? Price creates this SMT divergence within that prior daily low where the correlated market, let's say, took out that low. But in this case scenario, price did not take out that low point, creating that SMT. And then we see this break to the upside. So this would be a prominent area of liquidity. And then we had an SMT divergence within that level where this market failed to take out that prior, prominent area of liquidity. And then we get this break above this bearish fair value gap. And then price inverses it, come back into it, targeting most recent points of liquidity, like this original high, as well as these highs up here. So obviously, fair value gaps, inversion fair value gaps, the main emphasis and the main point of this is we have to have an overall context. So essentially, inversion fair value gaps are a reversal pattern, meaning that they aren't going to work if there's not a potential reasoning behind why the market should reverse. So the market should reverse based upon taking an area of liquidity to then target other areas of liquidity, right? Market goes from buy side to sell side to buy side. So we take out liquidity pool to liquidity pool, or it reverses because price taps into a level of resistance, or it taps into a level of support, right? These are the two reasons for why a market should reverse. Either it takes out a level of liquidity to target an opposing level of liquidity, or it taps into a level of resistance or support to where it can no longer continue going higher and it has to come back lower, or it comes back lower and it can no longer continue going lower and it has to come back higher. Make sure you guys focus on those specific rules. Now we're going to be putting this all together. I'm going to head on to the charts and show you guys some examples. Our first example here, we're looking at the Nasdaq, and obviously just before the market opens up here during the New York session, we want to create what's called a daily bias. So a day bias is basically just creating a plan or formulating a plan before the market opens up, so when the market does open up, we're not confused. Obviously, we're going to be looking at the 1 hour time frame here, and within a daily bias, we try to keep things pretty simple. We want to identify what has the marketplace done, where is the marketplace currently at, and where can we anticipate it to potentially go next. So obviously here we can see that we have been in an overall downtrend, where we can clearly see that price has been creating lower lows and lower highs within overall structure. And then we can see here that we're potentially within a reversal signature. I hope you guys remember that. So we can see that price took out this original low right here for that liquidity sweep, and then we had this overall break to the upside. See here, we can see that price broke back above this original high here instead of creating kind of like a lower high. We had this liquidity sweep, and then we had this displacement, right? Strong body closes higher, breaking back above this original high. So we're in a potential reversal here, and this would actually make sense, right? Because the market has been seeing overall drops to the downside, and we've left multiple inefficiencies within the markets. We have this bearish fair value gap right here. We do have like this bearish fair value gap all the way up here. So we have multiple fair value gaps up here that price could potentially come back up into, right? The market is a series of obviously expansions and corrections. Market sees this expansionary phase to the downside. It obviously cannot continue going forever. So obviously the market, once it finds a level of support, which I'd anticipate this to be a potential level of support here, I'd want to see a potential reversal within this zone just to come back into these levels of inefficiencies, because price is not going to leave these inefficiencies unfilled. Now that we've uncovered what's called our drawn liquidity on where we anticipate price to go next, we want to identify any potential levels of support. So on the 1 hour time frame here, we can identify this 1 hour bullish fair value gap. Can identify this last down close candle as a bullish order block. So obviously this last down close candle before this significant move to the upside, this would be classified as our order block. This bullish fair value gap plus this bullish order block combination, this should create a pretty good support zone that once price finds support at this level, we could potentially see a rally back higher. And just like that, we've kind of just created our overall bias, right? We anticipate where the marketplace was, which we can see price was in a downtrend. We anticipate that price is currently in a bullish level of support here. Now we anticipate price to come back up into these bearish fair value gaps back above us. And now the last but not least, we want to go down to the lower time frames and we want to utilize time. So since this is a 1 hour bullish fair value gap, we're going to go down to the 5 minutes time frame and we're going to see, is price going to maybe see a breakaway from this, right? That would be a confirmation that once price tapped into this level, we're seeing that breakaway from it. and we can, anticipate the longs, or is price going to create a SMT divergence at these lows? That would also be a confirmation that price has found support here to then obviously see that break back higher. So I'm going to go down to 5 minutes time frame here. Now that I'm down on the 5 minutes, I want to wait until the New York session opens up, which here on the Nasdaq is around 8:30. So I'm just going to wait for that 8:30 to open up and see what happens. But so far, for the most part, we can see that price has established this low down here, right? We can see within that 1 hour fair value gap, price kind of establishes that low. Now I'm going to wait for 8:30 to open up to see if we can get additional confirmation. See, 8:30 opens up here, and we can see we had an overall break to the upside, which is very, very solid. See, same thing happened here on the S&P 500, seeing that overall break to the upside as well. Looking at these two markets, there is a minor SMT divergence. Between these two markets, there's not really much of a SMT divergence, which is completely fine, right? Not every single time you're going to see a SMT divergence, but if you ever do, then that's a pretty good sign. But in this case scenario, there wasn't much of a SMT divergence, but we do still see that price did see this break to the upside. So just looking at it from a market structures perspective, what are we currently looking at? Well, we can see that price had came lower down into this level of support right here. Following that level of support, we can see instead of, continuing going lower, we can see that price had this initial rally higher. And then we can see we created that higher low, right? We created that higher low right there, failing to take out this original low, meaning that the overall structure, right, could be bullish. Right, where price obviously opened up, came down into this level of support, and now we're starting to see price creating higher highs and higher lows, which we can see price created this higher low, then we broke above this high, so this is now our new higher high point. Just from an overall structural perspective, this is bullish, and as long as we can remain in alignment with the bullish order flow, meaning now we want to be looking at potential setups in alignment with this bullish order flow. Obviously, we can identify this bearish fair value gap here. This was once a level of resistance, which we can see price did find resistance at right here, as well as right here, to then target right back below these lows. Now that the overall order flow is shifting from lower to now higher, prices should break back above this bearish fair value gap, and we should be looking at for more so of a bullish perspective right here as an inversion to reach back above these highs right here, and then we have that fair value gap all the way back up there. So now I want to see price break back above this bearish fair value gap here for my confirmation. We can see price giving that body close above that bearish fair value gap right here, signaling that inversion taking place. Really, really good signature right here. I want to see price come back lower to establish a level of support to obviously see a continuation back higher. So I'm going to place my entry here just back below here the opening price of that inversion. Keep my stop loss pretty tight here, back below the low of that inversion fair value gap. And I just want to be targeting back above these original highs right here, so we can obviously identify this high point. See, just above that we have that 1 hour fair value gap. So kind of just keeping things pretty simple here, right? Creating that daily bias. We identified our overall area of support, which was that 1 hour fair value gap. Price came down into that level of support, and then we got our lower time frame confirmation. Right, on the lower time frames, you want to be paying attention to structure. When price is in a higher time frame level of support, right, on the lower time frames, you want to identify the structure as price finding respect at that level. Price take out this original low, and then right, we had this initial rally higher. Right, from this initial rally higher, price failed to take out this previous low, creating a higher high. This is indicating that once price tapped into support level, it's finding the support that it needs, and once price breaks out of that level, then price has no reason to come back down here. So once price taps into a level of support, you want to see consolidation form, right, as well as price creating these higher highs, and then once price breaks out of it, you know that this area is confirmed. And then obviously we use this inversion fair value gap back at these highs as a level of support to obviously now target back above these liquidity pools. So this is what you will call an internal to external setup. So the internal would be this 1 hour bullish fair value gap, and the external would be this liquidity pool above us. A very consistent strategy. Now see, during our specific time, which in this case scenario was the 8:30 New York session. And if you guys want all the times for the Asia session, London as well as New York, I did put that in the free PDF, so make sure you guys join that free Discord. As we can see, price comes down into that inversion, and then we see the rally back higher prices. Perfect. So that's going to be it for a video. I hope you guys got a lot of value from this video going over this exact model. as well as if you guys do want a full trading plan as well as backtesting guide on this exact model, I did put it inside of the PDF, so make sure you guys grab your copy in that free Discord community. As well as if you guys do want to live trade with us every single morning, as well as access to 100+ hours worth of additional education, make sure you guys click that first link in the description and join the Spark Train VIP. We're live trading every single morning of 2025. The goal is to live trade every single day to help every single one of our students achieve their first payouts or make their first $10,000 trading. If you guys want to join that, make sure you guys click the first link in the description and join the Spark Train VIP. If you guys want more one-on-one help and personalized guidance where me and my brother will hold your hand until you're consistently profitable, you guys can click the second link in the description and join the Spark Trading University. That's going to be it for a video. I hope you guys got a lot of value. Make sure you guys click that like button, subscribe if you're new, as well as comment what you guys want to see next. I'm your mentor, Arkhamtrades. Be safe.